It's been a roller coaster ride for investors this week. It is Wednesday, January the 21st, and this is Markets with Megan. If you like this podcast, subscribe. You can hit the alarm bell, share with your friends, family, or colleagues. But we're here today to talk about some of the market movements we've been seeing over the past 2 days. And this is in light of having very slow economic data calendar. We got some disappointing news from the pending home sales today, but the majority of news that's been moving the markets has all been about geopolitical reasons. Not only the rhetoric between the U.S. and Europe concerning Greenland and the U.S. wanting to take ownership of Greenland, but also we've got a big sell-off in Japanese bond yields. This is something where we haven't seen the 10-year Japanese bond yields rise to this type of a level since 1999. So you're looking at well over 2%. This caused a lot of fear across the global bond markets. We saw a big sell-off in yesterday's U.S. bond market as well. Now, when you see higher yields and an increase in geopolitical tensions, what do you tend to see? You see the stock markets decline. And what we saw was those areas of the market that have seen the biggest rally last year, that have the highest price to earnings multiples, that can be impacted by higher interest rates, they saw the biggest declines. The MSCI All Country World had its worst single one day since back in late 2025, but it was really all led by the U.S., and that was specifically the Nasdaq, the S&P 500, large cap growth. We actually saw small cap stocks outperform large cap stocks yesterday. Still declined, but we did see an increase, them fall less. The other areas of the market that saw weakness was the dollar. When you get concerns about what the U.S. is going to do, if we're going to get into another trade war or tariff war, because of what the U.S.'s interests are in Greenland, that tends to spook all investors in U.S. assets. We did not see what some people think is a hedge against volatility around the world, Bitcoin. We did not see that rally. We actually saw that decline pretty sharply. But we did see gold again make some new record highs here. Now, today, this has reversed course. The market has turned around. President Trump came out today, said that he reassured he doesn't want to use force to take Greenland. We don't think that this is going to be some sort of a forceful situation when it comes to Greenland. Instead, at the end result, we think what will happen is just the U.S. having a greater military presence there. We think, as usual, Trump does come out with the big far ending part of the deal to somewhere meet in the middle. We agree, though, that any additional rhetoric around trade war between the U.S. and Europe, Trump talked about additional tariffs on wine in Europe. This is not good for the markets. It's not good for sentiment. It's one of the many reasons that we've been concerned about the market coming into this year. Valuations were pricing in perfection, and we're not talking about just from fundamentals with interest rates, with the economy, but that Trump would be completely quiet and we wouldn't see anything on the front when it comes to some of the other initiatives that he has that he came forward and campaigned on. So we think today's a nice welcome relief rally, but again, this volatility is probably not behind us. It's going to be a very interesting year. Don't forget, it's a midterm election year, and in the near term, we still are waiting for the Supreme Court decision on the tariffs, and then Trump has said he would shortly announce his recommendation for the Federal Reserve Chairman position that will come up in May. That's all we have today. If you want a history of our podcast, you go to marketswithmegan.fm. Thank you.